Good morning, degenerates, and welcome to a new episode of Boring Crypto IO, the place where I read you the boring crypto news so you don't have to. My name is Not Important, and I'm your host. Let's go. Today, the U.S. Department of Justice probing $372 million FTX exploit. North Korean hackers are pretending to be crypto VCs in new phishing scheme. The community slams New York Times for its latest sympathy piece on FTX Sam Bankman-Fried. And day gods and y00ts NFTs are bridging off Solana, and here's why. Bitcoin! Breaking down, y'all. Again, we've been beaten up on this level of around the 16.9. And today, on the daily, we are starting to break down. Now the question is this. Are we going to range like we did over here? Or are we going to hit this 16,450-ish and break down into no man's land? Ethereum looking exactly the same. It looked like we were going to break out of this resistance level, but we shot back down into it. Again, let's see if we will range. If not, I'm looking for that 1162 to hold. If we break down, see you later. Bye-bye. Yeah, guys, not a lot going on the charts. That's why I'm not spending a lot of time on them. Again, we had like barely zero volume over the weekend. And now we're starting to break down. Sorry, I'm having like an allergy attack. But yeah, nothing crazy, nothing super exciting. Kind of what we've been expecting. Neutral on the RSI over here on Bitcoin. Not a lot of money flow. Not a lot of volume. The market is stagnant, and we're having, like I said, a bit of a sell-off. Nothing crazy, but keep an eye on it. Again, if we hit this 16.4, 16.5 range on Bitcoin, we break down. There's a strong possibility we're going to go lower. Possibly hit this 15.8-ish, 15.7, 63-ish. Maybe that'll hold. If not, personally, yeah, 14. If we go down, if we break and it's ugly and there's nothing catching us, I don't foresee us going lower than 14,000. Again, this is not financial advice. Please, if you are trading, have your stop losses in place and trade smart, guys. This is crypto and it is crazy. But right now it's boring. All right, news. Let's go. The U.S. Department of Justice is probing a $372 million FTX exploit. Current whereabouts of the funds remain unknown. Surprise, surprise. FTX funds whereabouts. Poof, gone. It's like magic, y'all. According to Bloomberg report published on December 27th, the U.S. Department of Justice has launched an investigation into the whereabouts of approximately $372 million in missing digital assets from now defunct cryptocurrency exchange FTX and FTX US. On November 12th, amidst bankruptcy and internal collapse, FTX warned customers of abnormal wallet activity regarding at least 228,523 ETH transferred out of the exchange from an unknown perpetrator. On November 11th, on the night of the company's bankruptcy filing, FTX US's general counsel Ryan Miller confirmed that the transactions were unauthorized and that the subsidiary exchange had moved all crypto to cold wallets as a precaution. On November 20th, blockchain forensics firm Elliptic wrote that the unauthorized transfers amount to 477 million, and the unknown perpetrator swapped the stolen ETH for Ren BTC before being bridged to Bitcoin through the Ren Bridge service. Ren was acquired by FTX-linked hedge fund Alameda Research last year and has been alleged by Elliptic to launder hundreds of millions of dollars in crypto. Disgraced FTX founder Sam Bankman-Fried claimed that the incident was perpetrated by either a former FTX employee or someone who has unauthorized access to a former employee's computer. "Quote unquote, I've narrowed it down to like 8 people. I don't know which one it was," he said in an interview with citizen journalist Tiffany Fong. So I guess this is referring to right after they went into bankruptcy, that supposed quote-unquote hack that was draining the FTX funds. I remember when this happened. I guess they're finally digging into it to see what it was about. In the issue's last known update, November 29th, crypto analyst Zach XBT alleged that A portion of the stolen funds were transferred to a Singapore-based exchange, OKX, using a Bitcoin mixer. Lennox Lay, director of OKX, responded, OKX is aware of the situation, and the team is investigating the wallet flow. So who knows, guys? Do you think this is an inside job? Do you think this is Sam washing the money so he could basically hide it in an account and not have it found and use it later? Do you think this was a real hack? Do you think it was an inside job? Let me know in the comments down below. Moving on. Next story. North Korean hackers are pretending to be crypto VCs in a new phishing scheme. Alright, so before I even get to this story, if you are new to the crypto space, phishing is prevalent. Not only is it prevalent in other places, say credit cards, anywhere money's being moved around, but definitely in crypto. Rule of advice, guys. If you are clicking on links, or if you're typing anything into Google, don't ever click the ad or the sponsored link. Click the actual link to the website you're trying to get to. If you are typing in links, make sure you're typing the links correctly. Phishing people are very good at creating websites that look identical to the website you're looking for, but with misspellings here and there that people normally do. Don't click on any links in Twitter. Don't click on any links in your email if you don't know who they're from. This is how phishing hackers get your information, guys. I know to people like us that have been in the crypto space for quite some time, it seems like a nuance to continue beating down, or continue beating this horse, I guess. Kicking at a dead horse. But if you're new, just don't click on a bunch of stuff you don't know. Like I said, if you're going to Google and you're looking for a website, guys, don't click on the sponsored link. Click on the link that is the actual website you're looking for. If you're typing in the link into your address bar, make sure you're typing everything correctly and make sure you have that nice little lock when you get to the website. So let's get to the story. North Korean hackers are pretending to be crypto VCs in new phishing scheme. Kaspersky. State-sponsored Lazarus Group and associated hackers have had a busy year, and 2023 may see even more activity, the cybersecurity lab warned. Blue Noroff, part of the North Korea state-sponsored Lazarus Group, has renewed its targeting of venture capital firms, crypto startups, and banks. Cybersecurity lab Kaspersky reported that the group has shown a spike in activity after a lull for most of the year, and it is testing new delivery methods for its malware. Blue Noroff has created more than 70 fake domains that mimic venture capitalist firms and banks. Most of the fake presented themselves as well-known Japanese companies, but some also assumed the identity of United States and Vietnamese companies. This group has been experimenting with new file types and other malware delivery methods, according to the report. Once in place, its malware evades Windows mark of the web security warnings about downloading content and then goes on to intercept large cryptocurrency transfers, charging the recipient's address and pushing the transfer amount to a limit, essentially draining the account in a single transaction. According to Kaspersky, the problem with threat actors is worsening. Researcher Seong-Soo Park said in a statement, "This coming year will be marked by the cyber epidemics, with the biggest impact, the strength of which has never been seen before. On the threshold of new malicious campaigns, businesses must be more secure than ever." The Blue Noroff subgroup of Lazarus was first identified after it attacked the Bangladeshi Central Bank in 2016. It was among a group of North Korean cyber threats the U.S. Cybersecurity and Infrastructure Security Agency and Federal Bureau of Investigation mentioned in an alert issued in April. The North Korean threat actors associated with the Lazarus Group have been spotted attempting to steal non-fungible tokens in recent weeks as well. The group was responsible for the $600 million Ronin Bridge exploit in March. Some serious stuff. I mean, it doesn't sound like they're going after retail people. Like I said, it's going after venture capital firms and things like that. But, guys, stay aware. Stay safe. Make sure all your things are typed correctly, like I said. If you've ever been phished before or hacked before, go ahead and tell us about it in the comments below. Let's move on to the next story, guys. The community slams New York Times for its latest sympathy piece on FTX's Bankman-Fried. I don't know if you guys remember, but when the whole Sam Bankman-Fried stuff first started breaking, New York Times did a really, really shady puff piece on Sam that we all pretty much talk crap about. Let's see what they got going on now. The article bizarrely contrasts the alleged fraud carried out by Sam Bankman-Fried with gang violence on the Bahamian island of New Providence. The online community, including some cryptocurrency figures, has condemned the latest so-called sympathy article from the New York Times written about FTX founder Sam Bankman-Fried. On December 26th, article published titled "In the Bahamas, a lingering sympathy for Sam Bankman-Fried," New York Times journalist Rob Copeland quotes local Bahamians who appear to have mostly positive things to say about the cryptocurrency exchange founder. One resident opined he had a good heart, with another local saying they feel bad for him. Yeah, right. A resident interviewed for the article even said it doesn't make any sense that Bankman-Fried's alleged crimes landed him in prison. The article suggests that glowing reviews from Bankman-Fried's locals stem from his millions of dollars in donations to local charities, churches, and government entities, including the police. The FTX founders planned to build a hotel, and FTX head of office there were considered another positive by locals. Cryptonator, a self-described crypto degen, said Bankman-Fried did it like Pablo Escobar with regard to his donations to local charities and the government. Escobar, a notorious Colombian narco-terrorist and drug lord, spent millions of dollars building infrastructure and donating to charity in an attempt to garner favor with the locals. Only one person interviewed for the article appeared negative about the billions of dollars of alleged fraud by FTX founder, which included stealing customer funds, saying it gave them a negative outlook on crypto. "Why would you publish this?" one Twitter user asked. "This is embarrassing," another wrote. "Gotta respect New York Times for doubling down," one user tweeted in reference to a November 14th New York Times article that was also slammed by the crypto community as a quote-unquote puff piece. This is what I was talking about. Perhaps one of the most egregious parts of the article was the section where it calls Bankman-Fried's years-long alleged fraud troublesome but hardly comparable to gang violence on the island of New Providence. Oleami Oluri, God, I'm terrible with names, a native Bahamian and New York public defender, posted a video to Twitter blasting the article, saying the lengths they will go to try to prop up this white-collar criminal, and they immediately start trying to criminalize a black nation with gang violence. The Bahamas is not some gang violent-ridden country. Get the fuck out of here. Excuse my language. Bahamians do not to give a F about the man, she added. Others in the crypto community came forward to criticize the piece. Crypto newsletter founder Alex y00ts said he can't believe your joke of an organization continues to try to push puff pieces on the biggest fraud since Madoff. Bernie Madoff was found guilty of running the largest Ponzi scheme to date to the tune of nearly $65 billion. It just goes on, guys, to talk about people on Twitter that are talking about this. Yeah, I'm not a huge fan of New York Times, whatever, and I don't know what their part is, and I don't know if they're being paid off to write these to try and soften the blow for Sam. I don't know if they have some ties, or I don't know what the angle is what I'm getting at. Of we all know what he did. He even admitted being negligent. Whether he admitted to doing the fraud or not, he admitted how negligent he was in saying that he didn't keep track of anything. He didn't know what was going on. And for a CEO, that's complete negligence. So I don't know what the angle is to continue to try and paint him in a good light. If you know more than I do, guys, by all means, comment below. And last but not least, I have slaughtered these today too, guys. I'm sorry. It's been a rough day. I'm reading like crap, so I apologize. I guess we'll get through it together. D-Gods and y00ts NFTs are bridging off Solana, and here's why. If you guys have been paying attention to the NFT space, ever since FTX collapsed, there has been a huge downfall in Solana. I've never been a huge Solana fan in the NFT space. With the pausing of the blockchain and things like that, it just seemed fishy to me. I know they had a big pop. I know people were really into them based off of low fees, etc., etc. But since the collapse of FTX, there has been a lot of FUD for the Solana network, and it's interesting to see large NFT projects now talking about bridging back to Ethereum, which was kind of what popped them in the first place, is because they were big projects not on Ethereum, excuse me. So this will be interesting. The migration of Solana's top two NFT projects to Polygon and Ethereum is set for the first quarter of 2023 as an opt-in basis. So I guess you don't have to jump chains if you don't want to. You can opt into doing it. In my opinion, it might be safe to do so. Why not? As Solana continues to trend down and not look good in the market, why not get your assets off of there and put them on a safer blockchain, in my opinion. So let's see. Non-fungible token firm Dust Labs is migrating its two top-performing Solana NFT projects, DGods and y00ts, onto Ethereum and Polygon in a bid to expand their adoption. The news was announced on DGods and y00ts Twitter pages on December 25th, Christmas, with both expected to be officially bridged onto the Ethereum and Polygon, respectively, in the first quarter of 2023. DGods and y00ts creator Rohan Vora, known by the alias Frank III, said the decision was made to explore new opportunities and to allow the continued growth of the collections. The move will also see the Dust token, used to buy, sell, and mint NFTs on the DGods ecosystem, also be bridged onto Ethereum and Polygon. Vora confirmed that the two NFT projects will still remain on Solana for the time being. In a separate post responding to a Twitter user, confirmed that the bridge migration will be owner opt-in. During December 26 Twitter Spaces, Vora explained that 66,000 listeners that it was simply a matter of getting the NFT projects on the platform that he sees will deliver the next wave of NFT adoption. In his reasoning, he made parallels to the intense battle for intellectual property between streaming services such as Netflix, Disney Plus, and HBO Max, suggesting that the streaming services that secures the best IP will ultimately win the lion's share of viewers, which then attracts better projects. Then why did you start on Solana in the first place? Anyway, moving on. Once you get enough IP on the platform, it becomes a virtuous cycle. People who want to be on Netflix because that's just the brand and the place to be, he added. He said it, a similar battle is playing out between different blockchains that are trying to build the best NFT platforms, noting that as NFTs are driven by attention, there's an opportunity for virtuous cycles that would create a network effect for NFT projects. From there, the metrics, the volume, and the liquidity will follow that, he added. Vora said his bullish view on Polygon for NFTs was influenced by the fact that Disney, Adidas, Nike, and Reddit chose Polygon as their NFT platform of choice. Vora also said that he has received grant offers from many other platforms, most of which were much larger than that was offered by Polygon, but Polygon provided y00ts with the best opportunities moving forward. The news has only added to the growing list of concerns for Solana, which has seen the total value locked on the ecosystem fall 97.88%, going from a peak of $10.17 billion to $215 million at the time of writing, according to decentralized finance data aggregator DeFi Llama. Solana co-founder Anatoly Yakovenko shared his bittersweet feeling that the pair of NFT projects would no longer 100% focus on Solana to his 223,600 followers on Twitter on December 26th, but accepted the reality that these projects want to expand their reach. But controversial figure Ben Bitboy Armstrong and a fair share of his 1 million Twitter followers weren't so optimistic about Solana's future, with 70% of 11,881 voters in a poll voting yes to "Is Solana dead?" I don't think he's wrong. Look, whatever you feel about Ben, man, I don't think he's wrong. Solana isn't looking safe. It isn't looking strong at all. So according to the DApp Radar, both the y00ts and DGods NFT collections are ranked first and second in terms of fiat transaction volume on Solana over the last 30 days. So guys, again, I apologize for slaughtering these today. Just a rough day of reading. What do you guys think about Solana? If you are in the NFT space and you are buying and trading NFTs and collecting, are you a fan of Solana? Do you think the chain is going to continue to grow and be profitable, or do you think it's done? Guys, let me know in the comments below. But besides that, I apologize for slaughtering this today. I'm just terrible at reading sometimes. I hope you guys enjoy the content I provide here on the channel. If you do, by all means, per usual, subscribe to the channel, like the video, turn on the bell for notifications, and I will see you guys next time. I'm out of here.